Good evening, everybody. All right. Hope everybody's having a nice summer evening. It's been a pleasant evening here in Pittsburgh, Pennsylvania. Do you realize that tomorrow is the first day of July? Geesh. Seems like Christmas was just a few weeks ago. That's for sure. That's for sure. All right. Part of our trend analysis is if we're seeing an index like the Dow in an uptrend trading off, is it time for the reversal? Well, this is why the visual elements of candlesticks make the analysis very quick. We can see, obviously, that the NASDAQ is still trading higher. The transportation index still trading higher. And the S&P 500 still trading higher. So all boils down to that we can pretty much see what the trend of the market is just because one index is off a little bit, and I say off a little bit. As we can see in the Dow, it's not trading off very hard. It's still in this upward trend channel. So that's the important factor of being able to use the visual aspects of candlesticks to do your analysis, putting everything in a row. And so I guess, that's what I was supposed to mention, that we are starting to fill up for the training sessions up in on Keuka Lake. We still would rather have members sign up for it, but I think they just sent out the first promo to the whole list. But if you have any inkling that you would like to come, get with me and let me give you the details on it. But but this is part of the whole concept of using candlesticks to your advantage, being in the right place at the right time. And the trend, obviously, is your first indicator. So with that, we also can look at elements that might be making the Dow or the market heading up or heading down. As we can see, let me close out this thing. Crude oil, still in a slow uptrend, not anything rampant, just it's, as you can see on the pullback, it's not very decisive. Pullback, not very decisive. See what natural gas has been doing recently. Kind of waffling in here still, not doing much of anything. Interest rates, bond prices still moving up, which means interest rates aren't going down. Let's see. Can somebody help Lori? Get her sound on. All right. And so interest rates not doing anything to affect the market. The dollar is heading down. And like shown in this chart, just because of the there's that long-legged doji followed by a gap down. After that, you can see there is nothing that indicates that they're going to bring it back up above the T-line. And when they got to the 50, they tried to take it up and then came back down below it. Pretty much tells us they weren't heading up. They were still heading down, which means your euro couldn't get below the T-line. Still heading up. And the Japanese yen, just now getting toward the top of the resistance level with that big, huge spike up, and then the bulls right back in again. makes the likely target back up here to the top of this level. All right, what else we got? Cocoa gap up. Oh, pshaw. More than likely, it's going to be going right back into this upward trajectory or this upward trend channel. Sugar observed the obvious. Got up toward the top of the trend channel, reversed. Where do you think it's going? Back down to the bottom of the trend channel. That's what makes the trading a range or a channel very easy. Inverted hammer, bullish confirmation. Bearish Harami, starting back down. Bearish Harami, starting back down. So very easy to see where the bulls are stepping in and where the bulls are stepping out. Okay, what else we got here? This is helping get money to fund the barn. Is the same scenario with hogs. You can see there's an upward trend channel. You can see the buy signals coming in at the bottom of the trend channel. Today they gapped it up, made some good profits on Friday, and just had a happy day today with it gapping up the limit today, and now they're trading higher after hours. So with that, I took some profits. Didn't sell the whole position. Came out, took the profits, and bought back in, which freed up money to start buying the live cattle again. It was selling off, but near the end of the day, it started back up, which meant this upward trend channel is probably still in progress, trading up after hours. So that one's still acting well. Same scenario with feeder cattle. It's had some good days, and right now trading up after hours, indicating they're not selling this off. This uptrend is still in progress. And let me see what else we got here. I guess that's it for the, gold. Forgot gold. Gold, notice what it did. This is a very common, this is why you want to use the T-line. For nothing else other than there's a lot of times where prices move sideways, and there's just an extremely high correlation to the price hitting the T-line and starting back up again. That's gold. Silver. Notice where it opened. Now remember, there aren't very many people that have the 8 exponential moving average on their charts. And notice where this opens. Smack dab on the 8 exponential moving average and started back up again. Okay, Lori, let's see what's... Oh, you can't hear me anyways, so... Jim, I guess tell Lori to log off and log back on and see if that connects her up. Okay. Poor Lori. All right. Now, another reason why we want to know kind of which direction the market's going is because as long as the market isn't showing anything that's showing there's a drastic change of investor sentiment, remember, what drives prices? Investor confidence. And the longer you have investor confidence keep building up, that allows a lot of patterns to start working out. That's why we were recommending Moby this morning. Coming right up off the T-line, J-hook pattern. That's why we were recommending BSFT, J-hook pattern, starting back up. Now, there's a difference between trading the patterns, or there's a reason for trading the patterns, versus many of the stocks that are in an uptrend. Because a lot of stocks that are in an uptrend are in a slow, steady uptrend in an upward market, whereas the percentage move of a J-hook pattern, a fry pan bottom breakout, a scoop pattern breakout, are going to produce a lot bigger price moves than just an uptrending stock. All boats rise in a rising tide. We're just trying to find the boats that rise up a lot faster. Here's another one, GNMK. Volume a little bit light, but still a very nice pattern or a nice chart. Bullish engulfing, left-right combo. Break out of this downward trend channel. J-hook pattern. Next move up. In hanging man, pullback. Hammer, hammer, inverted hammer. Expect the next price move to be the same magnitude as this move right here. The moving averages, the 200 is the red, the 50 is the blue, the 20 is the 20 is a gray. Simple moving averages, because everybody in the world uses those moving averages to show where what to do with their portfolio. Our added ones are the 8 exponential moving average, the T line, the black line, and then also you can see the little green line in here. That's the 3T line. Very simple. The further away we move from the T line, the more effective the 3T line comes into play. So if we see a potential sell signal and then they start trading back below the 3T line, where's the likely target? Back to the T line. Okay, and then PTLA. Nice strong price move, 8 points. Look for it to go up to about the $37 range from here, especially on a positive open tomorrow. AGIO. Again, the reason we're showing the J-hook patterns is we can see the magnitude of the move and pretty much the speed of the move. So that means if this market just stays good for a while, some stocks are going to move up like this. This stock should move up like this. So, again, picking out what investor sentiment is doing, creating reoccurring patterns. There's a nice J-hook pattern on PZM. Nice fry pan bottom, strong move, pull back. There's your flutter kicker. There's your doji sandwich. Breaking out through here tells us we're going to have more upside. And OELD. Another J-hook pattern. And this is where we're using the term convergence, where we can start adding up all the elements that make us kind of indicate we're in the right place at the right time. Kicker signal, strong price move, bearish engulfing, pull back, the 20. Now a gap up through the T line and a close on the 200, telling us one of two things. Either it's going to fail the 200 to go through. If it goes through, that tells us we're confirming our J-hook pattern. We're heading higher. Oh, shoot, what was the last one I just did? To illustrate the, no, that wasn't it. Was it AGIO? Oh, there was one that had the left-right combos that were pretty plain. Well, here's one right here. Left-right combo is a doji followed by a bullish engulfing signal. Doji tells you there's big indecision. The bullish engulfing signal tells you which way that decision is going to go. I thought there was a better one out there, but we'll come across one. Dang. Started picking up steam again. There's your kind of your J-hook pattern. This one I wouldn't be afraid to be buying on positive trading. You can see investor sentiment is turning around. Now you're in J-hook patterns to the upside. Was it Moby that had the left-right combo? Not a great one. We'll find it. Don't worry. I know it's out there, and it's not going to get away from us. Fuel, also nice J-hook pattern. There's a left-right combo. There's your doji, bullish engulfing. So when you have a bullish engulfing or a signal, and you know they're going to take it up further, you can pretty much calculate that this is a J-hook pattern, because if this signal tells you they're taking it further in this type of little scoop type situation, that's your J-hook ready for the next price move. Was it EPZM? Well, there's one right there. I saw one where there was a few of them. Anyways, there's a left-right combo. Doji followed by a bullish engulfing signal. So all of these charts right now are very good buys because of the J-hook. There's a J-hook scoop type pattern. If I recall correctly, that was the same pattern we saw over here in setting up for SU. There's your little slow curve breakout, strong price move, J-hook scoop type setup. There are tons of good stocks. Well, I guess the answer to that question, Juno, is that you still need to pick out the right ones. Whoops, that's not the right one. But we're looking at good charts because we're discovering the good charts, knowing what they look like. There's lots of other charts out there that, let's see, I'm just seeing. Maybe that one's not really doing too much of anything. Pixel. So even though the market is up, there's some that are kind of lollygagging. We want to hit the ones that aren't lollygagging anymore. What is that one? Oh, who wrote that? BBRY. Fry pan bottom, J-hook pattern. So we're looking at a lot of charts that we've picked out to be good. Yes, there are a lot of good ones. We just have to pick out the ones that are trading the best. So J-hook patterns are going to put you in that situation. We are owning some that are working extremely well. There's the big fry pan bottom on VJet. What do we expect coming out of a fry pan bottom? A very strong price move. Is this price move over yet? Now it's starting to extend itself. So now we keep a much closer watch, and that much closer watch would be on a strong move tomorrow, which would be not only, let's make this bigger, not only away from the T-line, but also the 3T line. Now you start watching for profit taking. So this is where you go to the 10-minute chart when you start seeing something move too fast away from the T-line. That doesn't necessarily mean it's time to sell. But if we start seeing extension way up here, you go to your 10-minute chart and make sure it stays above the T-line. The worst case scenario is you have a strong price move in this tomorrow, and then it starts backing off below the T-line. You close out, take your profits. And then if it curls back up and comes back up through the T-line, you buy back in again. The only reason I haven't looked at short candidates is because I don't think it's time to be going short in this market. Not that there aren't short candidates, but right now, as investor sentiment keeps building up, was BKS a short candidate? No, BK, whoops, that's not the right one. S.BKS. And that's not even a short candidate yet. They're still in a J-hook pattern to the upside. And it's closed right at the 3T line. I wouldn't be consider shorting this one until you see it close below the T line. A doji sandwich. We'll get to a doji sandwich. Let's see. IMPV. IMPV, also a very good looking chart. You can see the basing in here. But where did the basing finally end? Right here at this bullish engulfing signal. Again, this is where our term convergence steps in. Supported on the 20, did a bullish engulfing signal through the 50 and the T line, and confirmed Now, not only are we confirmed, but you can see there's kind of a trend channel, and it's kind of broken through the top of this trend channel. That means there's a lot of running room for this one. First of all, it could get right back up here to test where it gapped down, and if it breaks through there, you've got a lot of room. I'd say a lot of room. Let's back up to the 200 or even higher. That makes this a very, very big upside potential trade. What do you mean when you say extended? Well, extended obviously is when a price is really starting to move too far away from the T-line. I mean, if this started trading way up here, we'd be a heck of a long ways from the T-line, and we'd be a heck of a long ways from the 3T line. That, to me, is extended. That's telling me, all right, they're moving way too far, too fast. Now, is there reason for it to move too far, too fast? Could be. But what happens when a price moves way past or way up faster than everybody expects? Or not expects, would like, or would like? There's profit taking. Because you can have the best stock in the world, and if it goes up strong, there's going to be some people out there that say, this is the time for me to take some off the table, and there's going to be profit taking. What was that? That was, MDSO. Starting this slow curl back up. Again, we're in an uptrend. Where's your next likely target? To the top of this channel, which puts you up in here someplace. But if it gets up into here, we're right here at the gap area. That means they could really rush it back up to the 200-day moving average. Would you play Delta with a would you play VJet with a Delta? Delta, none of the Greeks mean anything to me, Joseph. If you look at the delta on something like this, what do you think the delta was developing when this trade was, or it traded here? That delta had nothing to do with what the chart pattern was telling us once it broke out. This price delta had nothing to do with what was going on over here. Joseph, I will let you type in the definition of delta for Dustin so I can keep moving. Let me see what else we got here. S.SU. Let's see, we did this one. All right. And this has got more, again, here's convergence. This reversal is based on an inverted hammer with bullish confirmation, a morning star signal because it's closing right about the halfway point of this candle, and it closed above the T-line. It's got all the indications that we could see a double doji sandwich heading up here. A doji sandwich, Jason, is when you have a bullish day, a doji type day, and we know the simple rule of a doji. They're going to move it in the direction of how they open it after a doji, which means if they open it positive, we had a good probability of this candle right here and this candle right here were going to be the same magnitude. The definition of delta, not somebody type in the definition of delta. All right, Ecom. Ecom was one of our recommendations because of the slow curve. Backed off a little bit today, but did nothing to show that this trajectory of this big fry pan bottom had changed. You continue to hold this one until you see a sell signal and a close below the T-line. Tesla, same scenario. As long as this stays above the T-line. Notice the breakout of this downtrending channel. Then you have your 45 degree, not an uncommon pattern. Can you comment today? Bar of Moby. We did Moby, right? Moby. J-hook pattern. You can still be buying this one on positive trading tomorrow because of the J-hook pattern. So if this is wave one, went from basically $6 to $9. Look for it to move from $8 to which 3 points? $11. Tesla is probably what you want to say in the overbought area with no sell signal. Just because you're in an overbought area doesn't mean that trend is over. Remember the you can have this uptrend last for 3 months with it being in the overbought area. What you need to see is a candlestick sell signal and a close below the T-line to tell you the bears have gotten control. Does opening positive mean opening above the previous candle or just opening green? Well, one and the same. They're two different things. A positive open is where they're opening it. In this case, they opened it slightly lower, took it down a little bit, and then started trading back up above this candle. That told you the bulls were still there. On a candle like this, you want to see positive trading. Well, it took a few minutes for it to go positive. What you don't want to see is after a nice big move like this, they're opening down here. That doesn't tell you anything. That tells you the bears are still there. Okay, what else we got here? ACHN also has that 45 degree, but it's sitting right here on the T-line. This has to open positive and trade positive. If it opens lower tomorrow, you close out the position because that tells you the trajectory is now rolling over and you're back below the T-line. That means there's better places to be trading. Doesn't necessarily mean if you close it out, you're done with it, because you also had this message that there's a new dynamic in this stock. It may just be consolidating for a while before the next move up. And Mankind was a very simple analysis that anytime you see a long-legged doji, tells you there's vast indecision, they're going to tell you which way they're going to take it, but which way they open. The fact that they opened this positive and traded off doesn't really mean a hill of beans. They took it this way. If this trades back up through today's open, tells you the profit taking is over. You definitely want to be buying wave 1, wave 2, strong move to wave 3. Do you consider long tails at top of candles? Yes, that's all part of the analysis. Candles. This one is telling us they've got a shooting star, but the other elements are you've got the trend channel, and so far you're still trading above the 3T line. Where would I be out of this trade? Probably if it closed back below the T line, because tomorrow, if it closed back below the T line, it would probably be closing more than halfway down this candle, and below the T line, producing an evening star signal. Yes, that tells me it's time to take profits. Is that the same with a doji sandwich opening positive? Oh, I don't understand the question, James. Yeah, opening positive. I mean, opening positive tomorrow is if they open it up here, that would tell me they're opening positive after a doji. Okay, where am I now? Okay, lots of good charts out there. HTHT. This one you can be buying. Notice what it's done. Morningstar signal, bullish confirmation. The fact that it's supported right here on the 200-day moving average, closed above the T-line and broke out of this candle. Positive trading would imply that we're in wave 3, same magnitude as this wave right here, which means we should be going pretty close to the $30 area. HNT. There's your nice slow curve. Starting to pop up. Notice the trend kicker signal. If this trades positive tomorrow, you definitely want to be buying. That tells you wave 3 is also in progress. SFXE. You'll probably see this on the recommended list tomorrow. Why? Because they have a doji gap up, back up above the T-line. Morningstar signal, J-hook pattern. If they open this positive, what's happening? This little downtrending channel is being breached. You're probably moved from a low of 550 to whatever that is. 850, $3, moving $3 from here takes you up into about the $7 range. Now I say about the $7 range because it's not exact, but if it got towards $7, I would definitely be watching for my sell signals. QUIK, also another good J-hook pattern. Then your inverted hammer, bullish confirmation, wouldn't be afraid to be buying this. Probably be more apt to buy it if it broke through this little downtrending channel. RGLD, J-hook pattern. And notice what it did today. It used the T-line once again as support, telling us they weren't taking it down. So if this opened positive, you're probably now in wave 3 to the upside. Let's see, S.NG, left-right combo, kind of a spinning top, bullish engulfing, J-hook pattern setup. Another strong price move. Yeah, hold your requests on individual stocks until I tell Jim to do the double line, and then you can add them in. Usually we want to try to hold it to two per person so we can get to everybody. REN, REN, J-hook pattern bouncing off the 50. This one I wouldn't be afraid to be buying on positive trading tomorrow. YNDX, there's again your convergence. Failed at the 200, pulled back. Couldn't close below the T-line. T-line crunch, pushing it right back up to the 200. If this opens positive, you can bet your sweet bippy that everybody and their brother is watching to see whether it's going to get through this resistance. If it opens positive, we know we can be buying immediately with the anticipation that everybody else is going to see that it's going to be trading above the 50. They're going to start piling in. That's usually what creates your breakout type situations. That's where you hit a level where everybody's expecting it to do something. When it does, they all start piling in. Jern, there's your left-right combo. Little doji hammer, bullish engulfing. Where's your next target? Probably the 200-day moving average. Let's see. We still got some fry pan bottoms out there to keep an eye on. LYV, nice fry pan bottom. Where are you right at this point? Right smack dab to where the breakout level is. Tells us if this opens positive, you definitely want to be buying. Let's see. Have I got them all? No. There's still some good ones. BNNY. There's your doji sandwich that took you through the T-line crunch. This is one of your best trade setups. And this is the type of thing that we're going to kind of go through at the lake, is where do you put all the evidence that you could have a positive trade. And essentially, what do? We failed at the 50, pulled back to the T-line, had an inverted hammer, bullish confirmation, evening star signal, a T-line crunch setup, a doji right on the 50. So everything's telling us one very simple maneuver. If they open up positive, they're going to move in the direction how they open it, do a doji sandwich, same magnitude as this. And if they're doing a doji sandwich, that means the 50 is not acting as resistance anymore. Got all the elements of why you want to be buying at that point, whether you're buying the stocks or the calls. It just makes it a very easy entry or high probability entry situation. PTI. Observe the obvious. The profit taking's over. They're starting back up. If this is wave 1, wave 3 could be the same magnitude. And if wave 3 is the same magnitude for option traders, this might be way up there, but very simply, you buy a low-priced, out-of-the-money calls. If this works, it's going to work huge. If it doesn't work, you don't have very much downside. Oh, I goofed up again. CONN. This is where, again, you observe the obvious. The obvious is we're in a trend channel. We're in an uptrend. Where's the next likely target? The top of the trend channel. Pretty much the 200-day moving average as the target. HOLI. J-hook pattern. There's your doji sandwich. Doji sandwich shows good strength. And what do we anticipate after a doji sandwich? More upside, which means if there's more upside, they're going to break out through this level, which means that J-hook pattern's in progress. KEYW, doji sandwich setup. If this opens positive, another strong day, which takes you closer to the 200-day moving average. And RCPT, row. What was that? RCPT. There's a little left-right combo. Smack dab on the T-line. Gap up. Wave 1. Wave 3 will be the same magnitude. What else do I got here? Scoop pattern. I meant to recommend this one for today, but the other ones look just as good. But notice the scoop pattern. A big, flat handle, Morningstar type signal, scoop pattern. Where are we right now? Scoop pattern's what? A slingshot effect to the upside. Where are we right at this point? Right at the same place that it gapped down, which means if they open this positive, there's nothing in here to cause overhead. They could take this all the way back up to the 200-day moving average, fill in this gap. What's the symbol? ELX. And S.CLB. Big flat handle, fry pan bottom, little cup and handle scoop type pattern. Also very simple trade. If this opens positive, doji sandwich, same magnitude as this, I'd start looking to take some day trade profits right here at the 50-day moving average. Again, this is just all the same effect or same setup that occur in human nature. Just time after time, it creates the same type of patterns. Let's see. Going to the 10-minute chart is very effective. If you've got one of the biggest fears most people have is, man, I've got big profits. It's way up. Is this the time to take profits? Well, you got to figure out whether this gap up is a J-hook pattern breakout or is this a gap up at the top. It looks like a J-hook pattern breakout, but just to be safe, all you have to do is flip to your 10-minute chart. And if it stays up above the T-line, came back near the end of the day, but notice it didn't do anything decisive. So near the end of the day, if you're still trading up here and it's just trading below the T-line, what's that telling you about your daily chart? Telling you your daily chart is still going to be up here near the top end of the trading range somewhere, which means it's not creating any sell signal. WPX. This one, I was buying the July 25 calls at the end of the day, because if this is doing this J-hook pattern coming out of a fry pan bottom, our classic, what should our next high probability expectations be? That we're going to be on another wave this same magnitude. So buying out of the money calls, I mean the 25s, the 25 price is way up here for I think it was 30 or 35 cents. But if this works, that 35 cents could go to $3 or $4 in a matter of a week or two, just based upon what the pattern looks like it could do. And I guess, one more. Let's see, Vendai was way over there. Vendai is also another one we're watching because notice what it does. It pulls back, came up. Right now we're in kind of a slow curve. I would look for another big, strong move, breakout to the upside because it's kind of a stepstone pattern, up, sideways, up, sideways. Look for the next up. All right, and part of that profit taking is if something is moving big, see if I can do this correctly. If something is moving big, do you take profits or do you stay in it? This morning they opened up lean hogs up almost the limit, or it may have been the limit. Was this time to take profits or were they going to take this higher? Well, if you went to your 10-minute chart, 10-minute chart brought it off, but then you can see they weren't selling it off and they finally locked it up the limit. But had this started back down, now I did take some profits right in here. But as soon as, again, this was a 5 or a 10-minute chart, I'm now watching, because that was in the first 10 minutes, I'm watching the 5-minute chart. 5-minute chart's backing off, and then all of a sudden it comes back up. I closed out positions, and then I bought them right back because that told me they weren't taking it down, they were taking it back up. And if they lock this up the limit, that meant that after hours they might be taking it up some more. Now they haven't yet, but come on, you've got some big money coming in. Yes, Kenneth, we are doing, I think next week we are going to be doing the debit spreads for option trading on Tuesday night. And then for the option trading room, we will be doing a special session going into more detail on how to do the option spreads using, or debit spreads using the staggered spreads. And then within the next couple of days after that, whatever day we can get it scheduled, we're going to be doing the 5-minute, 10-minute entry and exit combinations, which is kind of a adjunct or add-on to the 3T and T-line session we did a week or two ago. Okay, let me see what else I've got some stars here. Why do I have stars? Oh, we're probably going to be recommending this one because of the doji gap up above the T-line, J-hook pattern. This one's got potential another 40% move to the upside. And KPTI, option room, get ready for option suggestion on this one. It'll be in that room tonight. There was a couple more. Oh, ELX will probably be recommended on positive trading because if it opens positive, it's basically breaking out through this, the handle, which means there's a lot of room for it to move right up to the 200-day moving average. Let me see. I guess that, and we would be recommending the calls on this one on a positive open tomorrow because of the potential of wave 3 taking this one up pretty quick. That's WPX. So with that, I guess, is there any general questions on candlesticks? All right. With that, Jim, go ahead and do the double line. And in 4.6 seconds, do the second double line. Okay, DYAX just did some profit taking today. Nothing to change this upward trajectory. You stay long with this one as long as it stays above the T line. More than likely, because this is the trend channel, I wouldn't be surprised if you don't see a doji type day and then they start slowly taking it back up. Oh, man, okay. And TRXC. Wow, that's not what we TRXC. This one you can't short it. I guess you've got a couple cents to short it, but this one there's nothing here to tell you want to be in it. That's still kind of your left-right combo to the downside. So once it came down and closed below the T line, after your sell signal up here, which was your hanging man doji, and then a close right here on the T line, that told you they weren't taking it back up. They were still taking this one down. DDD, good looking chart. Stay long. I would use the halfway point of this candle right now as my stop. Shouldn't come back down. If it does, it's bringing it back down to the T line. PRAN was lethargic most of the day, but then it got I guess it did. Had some juice come in it late in the day, but this one you stay with. You can see it setting up, and we're getting right near the breakout point. If this opens positive still, you can still be buying this one with the potential. That if once they break out into the gap area, they could take it all the way back up to the 200-day moving average. And form, just stay long. Here's a perfect example of a reason why you stay in as long as it doesn't close below the T line. Just stay long on this one. AMPE, another one, you just stay long. Looks a little bit toppy right now, but notice this is not called a harami, this is called a homing pigeon, which means the same thing. Even though this was a dark candle today, told you pretty much the selling has stopped, I wouldn't be afraid to be buying this one on a positive trading tomorrow at all. That's a good looking chart. ISRG was a recommendation if it opened positive today. Did I recommend that one? Oh, I think I was going to put that as an option trade for the option room. Had this opened positive, essentially you have your fry pan bottom, your cup and handle, but this one's still probably in the game. As long as it doesn't close below the T line, and if it comes back up through this level, you definitely want to be a buyer. And that's somewhat along the same lines as our recommendation on ZOO. Oh. Did I do that wrong? Or maybe I did over here. ZOO. Notice when it came out of this little cup and handle through the 50, came back to the 50, and now back up. You can still be buying this one with the expectation that the first target is right here to fill this gap. That means you're going to be in an uptrend. It could have a lot more upside after that. A-ray, big, long-legged hammer type signal. If you're short, you stay short, but if you're ready to go long, you buy this as soon as it starts coming back up through the T line. AGQ, belt hold. Notice where the belt hold came to. Open smack dab on the T line. Use the 200 as support and close back up. If this opens positive, you want to be buying. All the sellers have been taken out of it. And EXTR. There's the T-line crunch pushing you right up to the 50. If this opens positive tomorrow, you can be buying immediately. POWR. You stay long on this one. That's still a good chart. Let's make this big enough where we can see what the heck is going on. Kicker signal, consolidation, piercing signal. If this opens positive tomorrow, you definitely want to be a buyer. And PETM, another one you just stay long, but this one obviously has to open positive. If it opens lower tomorrow, you close it out, but you just get ready to buy it back if it comes back up through the T-line. And IQHU, another one. All you can do right here is stay long as it stays above the T-line. BBBY. This one, these are the hard ones, but notice where do most people sell? They sell at the bottom. For a longer term hold, you can be buying this one with the anticipation that you're going to come up and at least fill the gap, but usually this is the bottom. That's whatever the bad news was is probably being corrected, and they'll start taking this one back up. The Russell, just stay long. That's got a nice J-hook pattern. Stay long on that one. And LNG also has, there's the doji sandwich right here, kind of a doji hammer. But you can see there's indecision. The body is small, the tail is bigger, right at the breakout level, and then a doji sandwich. And what's the doji sandwich result? More upside after that. You can be buying this one. RFMD. You can start thinking about buying this one. More on a J-hook pattern. Once it comes back up through this pattern, or through the T-line, remember, the Japanese rice traders say, let the market tell you what the market is doing. Well, the market was telling you that they couldn't take this down through the T-line until there was profit taking. If they bring it back up above the T-line, you probably still have a steady eddy keeping you up above the T-line. Same scenario going on right now in AMKR. Look at the left-right combo and a close. This opens positive, you can start buying, because what's this chart telling you? That once it gets above the T-line, it stays above the T-line. So notice how this uptrend started. There's your kicker signal, back up through the T-line. There's your sell signal, an evening star signal. There's your buy signal, left-right combo. And if it opens positive, you definitely want to be buying this one. Now, this one is probably going to create another steady eddy for the next 5 points, taking you up into about the $16 range. Why do you like to have steady eddies in your portfolio? Because you can see this market's been up and down for the last few months. This one's just been steady up. So what that basically does is if you've got 10 positions on at night, if you're having to make your evaluation, if you're in something like this, there is no evaluation. All you have to do is glance at this chart and say, don't have to worry about this until they close it below the T-line. Five, another one, you just stay long as it stays above the T-line. Notice the J-hook pattern setting up. GoGo was breaking out a little bit today. If this opens positive, it's going higher. Just be diligent when it gets to the 200-day moving average. LinkedIn, Morningstar type signal at the end of a flat trading area usually acts as a slingshot, like a mini scoop pattern, taking you up into a new level. I'd be a buyer on positive trading. MPEL, just stay long here as long as it stays above the T-line. Let's see, ODP, another one where you notice the Morningstar signal that turned you around. The top of the trend channel now becomes your next target. We did Power Hain. Hain, get ready to buy this on positive trading, because if it comes back up through the 50, it's confirming this big bullish engulfing signal, number one. Number two, it's breaking this downward trend channel, probably taking you back up to test these levels. Just be aware of what your magnitude of return will be on that one. That's more of an institutional type trader. And ANV, another one where all you can do is stay long, anticipate a J-hook pattern starting from here. If it does, well, obviously you need to see a positive open to stay in this one. If it opens lower, remember, they're going to move it in the direction of how they open it after a doji. It means the T-line's not acting as support. Worst case scenario is you sell it out and you buy it back when it comes back up to the T-line. If I can get my butt moving, I will have the write-up on JCPenney. This one, for long-term investors, you could be buying here on the basis that in 6 months to 12 months, this will probably be a $14 to $15 stock price. This is going to be one of our long-term recommendations. And Yahoo, they are gapping this thing up. Where do you think your next target is? There's a top here and there's a bottom here. They're probably heading up here for this level. WLL is our other long-term recommendation, and it's doing a cup and handle setup. You can still be buying this one. Where are we? At the $80 range. I think there's still at least another 25 to 30% upside on this one on the long term. Oh, what happened there? S.ONYX. Am I doing something wrong there? Telephone. Whoops. Telephone, I wouldn't be long or short. That's a sideways chart, and it doesn't have any magnitude of movement one way or the other. I'd be trading something else other than AT&T. Not even long term right now. That chart didn't look good. MDT, that one you stay with as long as it stays above the T line. If you're holding this long term, which again, this being Medtronics has now moved into the institutional trading category, you can stay long as this doesn't close back below the 50-day moving average. See, we did DDD, AG, J-hook pattern. This is a perfect buy on a positive open tomorrow. JNet, that one had a good-looking chart. This one you can be buying on positive trading. Bullish engulfing right smack dab on the T-line. XCO, J-hook pattern. This one you can be buying also on positive trading. That's a good-looking chart. Twitter, just stay long as you don't see a sell signal and a close below the T-line. Nuance, get ready for a J-hook pattern. Again, notice exactly what happened here. The further they moved away from the T-line, and when it came back down through the T-line, 3T line, they were bringing it back down. This is up in here is where you should have been taking your profits. And now you get ready to buy this back if they can bring it back up above the T-line, because that's in your inverted hammer, doji, bullish confirmation. Ford, stay long. This is another long-term pick that we've been owning ever since 2.5. BA, Boeing, I wouldn't be in this one yet. There's nothing here. It's trying to bottom, but it hasn't shown that it's bottomed yet. I'd be trading something else on the long side. If I was short, I'd stay short. LSCC, let me see if I can do something here to make this more interesting. Nope, I can't. I wouldn't be long or short this one. Now, if you're playing this one right now, you do have a bullish engulfing, you do have confirmation, but you need to get through this area. Otherwise, this is still a sideways chart. And CLDX, this one you should be out of and potentially going short, which means they could probably bring it back down to the 50-day moving average. Northern Palladium, this one you get ready to, well, you can't go short because it's below $5. But this one you should be out of, especially if they open this positive or lower tomorrow. Let's see, Valero also, you can stay short on this one. First target obviously is the 200-day moving average. which would be right about the same trajectory as this downtrend, or the bottom of the trend channel. MPC, another one you can stay short. Observe the obvious, a failure right here at the 50. At the same level it fell before, closed below the T-line, gap down. You can be shorting this one. If it opens lower tomorrow, it means they've even gone past the low of a few days ago. Where is the likely target? I don't know. They've already broken this level. You just stay short until you see a buy signal. Let's see, POWR, we did. That one, you stay long. That one's going to the 50. And this one, we're using that it's going to the 50 because of your strongest signal, the kicker signal. Consolidation, you definitely can be buying this one on positive trading tomorrow. XOMA. Oh, this one doesn't have enough energy right now. I wouldn't be long or short. Stochastics are heading down. You're below the T-line. You're not heading down and you're not heading up. You're still caught in this sideways. I'd be trading something else. Okay, a few more. Vivus. Vivus also not very energetic at this point. You can be buying this. You just have to make sure he breaks out through this level fairly quick. And S.CLF. Another one that I wouldn't be real excited about. Well, let's see. It's bottoming. You're still in a downtrending channel. It has to probably break out through the 50 to tell you there's been a new change of investor sentiment. And MAKR is probably going to be recommended again for the kind of that steady eddy if this opens positive. Again, a left-right combo, inverted hammer, bullish confirmation. If they open up positive, it's pretty much telling us that the T-line is not acting as resistance. Then you can hang on to it as long as it doesn't close back below the T-line. What is the significance of a long tail, and does it point to the opposite direction of a move? The long tail, I forget which one had the long tail. Yes, if it has a long tail, that means they've taken it down and the bulls have brought it back up. It means they've taken out all the sellers and now they're buying. So that's what the hammer signal does. The opposite is the shooting star with the tail way up into the sky and then the body closing back down toward the lower end of the range. Tells you the bulls took it up and the bears started knocking it back down. So that price movement has significance. That's why it's built into some of the signals. Sometimes, though, if you're in an uptrend, I can't remember which one it was. But sometimes if they take something up real strong and bring it back down, and then they keep taking it back up, they're going to go back up to the top of that where they took it up to the first time. Oh, John, just kind of an institutional buy is when the stock has gotten enough institutional following and the volume, the company becomes big enough where it's so big, there's lots of stock out there, they start slowing down. Remember years back, Dell was just a screamer. Well, Dell kept adding more stock and the institutions kept buying more until finally it got to be where it was a very slow, sluggish moving stock. Walmart the same way. It was a tremendous growth stock and then it became an institutional type trader, which just means they move around based upon the institutions buying and selling, which doesn't necessarily mean they're going to produce real big price moves. They may produce good moves, but not what you would want to do as far as a fast trading setup. KER needs to break through this level to break out into new territory. Let's see, we did Nuance, we did Mankind, we did Ecom. How do you recommend we set price targets? At the obvious. Now, in this case, if this is wave 1, this is wave 2, and this price moved 3.5 points, that tells me the next target is somewhere up here around 44, another 3.5 points. If you can see a pattern breakout and there's a obvious resistance level, that becomes your first target you want to watch to see what happens. Just visually, we're looking at what everybody else is looking at. We can see what type of signals or patterns are getting us there, but there is what everybody else is watching to see what happens when it gets there. Tesla, you have a Tesla, that shooting star signal isn't a huge signal. That's more just kind of in the trading range here. So again, did a shooting star here. So for this to be a shooting star bearish signal, they'd have to close it now back below the T-line to tell you this uptrending channel is over. Let's see. S.PQ. That's got kind of a shooting star doji. So this one's very simple. You're in an uptrend until you see a sell signal. In this case, it closed back below the T-line. Now, tomorrow the T-line could be up here. So if they closed it back below, they'd be closing it more than halfway down this candle and below the T-line. Yeah, that's time to start taking some profits. Pran, that's not really a massive shooting star, number one. Because the shooting star has to have a tail 2 times bigger than the body. This doesn't look like it's quite 2 times bigger, number one. And number two, it has to occur when your stochastics are in the overbought area. Stochastics are still heading up. So, yeah, all this was a big day with some profit taking in it. Let's see, ONVO. Yeah, this is not a selling day. This is just a down day and an uptrend. Your stochastics aren't in the overbought area. You've had a big gap up breakout. More than likely, worst case scenario is they're going to bring it back down and test to see if the 200 is going to act as support. And if it does, they'll start taking it back up, which means you're still in an uptrend. Right now, I would if I own this one, I'd hang on to it as long as it doesn't close below the T-line. Let's see. Yeah, you can do sector analysis or sectors just as easy as you do stocks. If you've got Metastock or Thinkorswim or TCNet, you can click on the sector area and scan for the biggest percent price moves and as far as a sector indicator to see which ones are the strongest. How would we set a price target for Pran? Again, see Pran. First target is where they gapped it down, which would be right here. That would also be the top of your fry pan bottom. And then if they broke through that level, then your next price target is what everybody else would be watching, would be the 200-day moving average. F5. F5 I wouldn't be too enthusiastic about. Well. What am I doing here? I'm going to go this way. Yeah, I probably wouldn't get too enthusiastic, except it's had this downtrending channel, which looks like that channel, or that resistance level, acted as support level. So you could be buying this, but I'd probably be more apt to buy it once it broke through the recent high. Yeah, I guess you're still in a J-hook pattern. I should say yes. This one you can still be buying. Just be aware of what the lack of your percent return will be. What is your near-term target for Ford? Ooh, boy. Well, if this is wave 1, wave 2, wave 3 the same as wave 1, that puts us up right about here, right back up near the, I hate that little thing, back up here near the highs, and then you see what it does at that point. Okay. I guess that's all we got for tonight. Last one is RNA. Got a doji that came almost right down to the T-line. You could be buying this one. I'd probably have a buy stop at 13.05. If it came up through there, it tells me we're heading up in that direction. And, oh, pshaw. Hang on for 1 second. Okay, sorry about that, folks. The electrician. So anyways, I would be buying this one. It broke through because it's still in a nice steady uptrend. And Goog, yeah, as long as it stays above the T-line right now, you want to stay with this one. Notice even when it backed off today, it was still above the 3 T-line. It did a left-right combo. So if it trades weaker tomorrow, it means they're just bringing debt back down to test the T-line. All right, let's see. In New York trading, is the New York trading the only multiple one you do this year? No, I'll probably be doing another private trading session maybe in early October. Might not be as elegant as Keuka Lake. Might be right here in my office here in Pittsburgh. Or we might do it at Betsy's house in the Carolinas. She says she's on a nice lake. So, and then probably before the end of the year, we will do 1 or 2 more 2-day trainings online. So, all right. What else was I going to tell everybody? I guess that's about it. All right, everybody have a good evening. We'll see you back here bright and early in the morning. We'll see you then.